Hey everybody, it's Jamin Coker with Secure Financial Management with your January 2018 Economic Update. In this update, we'll discuss some of the events that have impacted markets over the last couple of weeks and what they might mean for you as investors. Now, please stay tuned to the end for a required disclosure statement. Well, if you've been paying attention to the markets for the first few weeks of 2018, you'll see some pretty impressive gains. And a lot of these gains seem to be built off the backs of the corporate tax cuts that are going to go into effect this year in 2018. We could discuss back and forth the winners and losers of the new tax plan that was announced and was finally passed in Congress. But it's pretty universal and unanimous that from a corporate point of view, it's definitely a net positive. And a lot of these gains that we're seeing in the S&P and even some of the global stock markets seem to be built around that premise of these tax cuts. One of the most obvious side effects of it that we saw just yesterday in the news actually was that Apple announced it's going to be bringing back $350 billion with a B, not 350 million, $350 billion to the US, and they'll be investing it. Now, this is money that was parked offshore overseas. They didn't want to bring it back because they were going to pay a whole lot of taxes on it. Well, that tax rate, they got a special tax rate to bring that money back. They're going to pay about $38 billion in tax. Still a lot, right? $38 billion in tax, and they're going to be investing that $350 billion into the economy over the next 5 years. That matters, right? That's pretty significant. Now, yeah, they might use some of that money to buy back shares, to build new factories, to hire more people, but it's money coming into the economy, and that matters to the markets, and you can see that reflected in the stock market at a broad category. Now, Apple has a whole lot of money offshore, but they're not the only company. Different estimates have ranged this into the trillions, right? That there's trillions of dollars parked offshore by various companies. You know, you've got Apple, you've got Microsoft, but there's tons of other companies that we're not even mentioning right now that have pockets of money overseas. Now, if we get a lot of that money coming back, sure, some of it might go to buy back stock, which will help drive up the stock market. Most of us are investors, right? So that helps us out. But even if it goes in the forms of bonuses, increased salaries, things of that nature, most of that money ends up finding its way back into the economy. And that's what a lot of these gains are based off, is that a more rosy, a more positive economic outlook. So those are a lot of the things that we've noticed over the last couple of weeks, and kind of the elements that are influencing those things. This time of year, there's also some interesting things we look at. One of the factors we look at is called the January effect. So the January effect is something that's been noticed over time, that however the stock market performs in January is a pretty good indicator of how it will be the rest of the year. And to break it down real simply, if the market's up for the month of January, historically it will be up for the whole year. The reverse is also true, right? If it's down in January, if it's a down month, it will be down for the rest of the year. Now, we don't put too much emphasis on a lot of these phenomenons and effects that we see, right? Because there's actually another one. Sounds a little bit more ridiculous. It's called the Superbowl Predictor, right? So some guy back in the 70s found out that almost 70% of the time, 70 to 80% of the time, if a team from the AFC won the Super Bowl, the markets were positive. Kind of ridiculous. You can find any metric that you want to have a positive correlation with something, right? So they're interesting things to look at, but we don't really put them into our planning. What we look at, we need to stay focused on the fundamentals, right? What's happening with unemployment? What's happening with inflation? What's happening with interest rates? Those metrics that we can measure and that we can verify, that's what we look at when building our investments, our investment portfolios, and I encourage you to look at those same fundamentals that we can actually gauge as well. Well, that's it for the January 2018 Economic Update. As always, please remember that nothing we talk about here should be considered a recommendation. If you have any questions, please give us a call at the office, 210-428-6250. We'd be happy to speak with you.